The other big deal is the real divergence between performance of chips versus software, and it's pretty stark, to say the least. The SMH year to date is up 43%. The IGV, the software ETF, is down 2.5%. And AI has a lot to do with that. Not to suggest there aren't AI winners in software stocks that have done well. You know the ones that have. You also know the ones that haven't. And that, Kristina Partsinevelos, who I told you would be with us here at Post 9 and is now, is the big deal. And that's why this disruptive force of AI is having disruptive implications for a lot of stocks that you follow, right? Chips versus software.
Yeah, and if we start with software, I guess we could acknowledge that the IGV ETF is actually higher today, but that is largely because of CrowdStrike's earnings beat and raise. And it's helped sentiment, but it doesn't necessarily mean that the divergence between, like you mentioned, the SMH and the booming semis and battered software names will necessarily shrink. There is concern that this anti-software trade will continue into the second half of the year for several reasons. The obvious, you talked about it, the spending shift from software to AI projects. And I'll give you examples. Salesforce said, quote, high levels of budget scrutiny. That's what they saw in their latest earnings report. MongoDB, we're not seeing AI apps in production at scale. And this telling one from Datadog, the quote being, the revenue jumps you might see from cloud providers might relate to supply of GPUs coming online. Those typically won't generate a lot of new usage for us. Those are warning signs. Investors have a better understanding of risks also leading into possible, or I guess, less change for earnings beats. There's hesitation to buy the dip until they see how bad the slowdown is going to be later on this summer. And then all of that spending during COVID, I didn't want to mention it, but it's still something on calls, is working its way through a lot of these software names. And then, Scott, next week we have Oracle, right? And if you look at Workday and Salesforce and their non-AI bookings and stuff, there was a lot of concern there, so that could be a negative read for Oracle and then reflect negatively across the space.
The bottom line, guys, is AI, cyber, good for software. If you're not in that wheelhouse, Weiss, where are you playing? Like, what are people supposed to buy? If you've seen some of these software names, whether it's the Salesforces, the Nows, Adobe, for example. Right. Used to be owned on this desk. I don't know who still owns it now. You still own it now. I mean, that thing's been a disaster.
Well, hold on a minute. Adobe was done. It had a huge run. It ran up like 100%. And it's come back. Of course, it's flat with a year ago. The company is doing well. They incorporate a lot of AI into their products. I mean, Photoshop is much enhanced by artificial intelligence.
Right, you liked it a lot better at 638.
Of course, and we trimmed it.
Than you do at 450. That's my point, right?
And we trimmed it. So it became a big position. We trimmed it. But those names are not gone forever. This is a period of time where they're totally out of favor, and they will come back into favor. You just have to pick the spots to buy them where you just are comfortable waiting.
I mean, Kristina mentioned, though, CrowdStrike, to our point, AI and cyber, those are the places that you need to be. But not all cyber stocks are created equal either.
They certainly are not.
Because if you look at, you could pull up, CrowdStrike versus Fortinet and Palo Alto.
Right.
Charts don't look the same.
No, CrowdStrike is clearly doing something different, nuanced, capturing market share, 33% revenue growth. The company increases its headcount by 15%. Management's telling you how confident they are in the business growing. They're in a unique position. They just won a 7-figure contract from a Fortune 100 healthcare company that previously used Microsoft. This has now become the clear leader in terms of cybersecurity holdings that you have. I first owned it personally. It was added to the Joe T ETF a few quarters ago, and I'm very content on both of those positions and hope to hold them for a long time.
Run up into the number, exceed expectations.
High expectations,
I know,
too, going
right?
in.
The stock
really
was
high.
Up, the bar was really high. And then the stock has the ability to do that almost 10%.
And strong performance again today.
Yes, and it's having a positive effect on the IGV. But overall, you're not really seeing that much of a separation between the winners and losers within the software mix. So I wonder if this run-up just really gets washed out next week. And there was one point you mentioned, Joe. You talked about yields. And I did have a chart. Hopefully we can bring it up. Just the 10-year versus the IGV. They were actually falling in tandem up until yesterday, which is an interesting thing because normally when yields drop with the 10-year, you start to see software go up. So if that trend reverses next week, CrowdStrike's helping.
Growth scare. I mean, if yields are coming down, then you have growth scare. You're worried about CapEx, pulling in the reins, maybe not spending as much on software as you were. All that. It all plays in. Thank you so much.
I think just a quick word. I mean, there's a reason why software is underperformed. If you take a look at the stocks, they had the same trajectory as all the others, the ones we're thinking about, but they didn't execute. They missed on the quarter or they missed on the guidance. That's why they've traded down. It's not a separation because of AI. It's separation because of execution of management.
No, but you could also suggest that you could also suggest though that a lot of stocks got an undeserved AI boost, and now the chickens are coming home to roost.
Definitely, there's an AI premium to a lot of names, but I don't think they would have had the stark underperformance now. If they hadn't missed.
Well, they got to multiples that were a little bit over exuberant, and
Adobe's missed, CRM's missed.
I understand. I understand
they've all
that.
missed.
Yeah. Well, they're still growing, and they will keep growing. The truth is that if you have a stock go from 1% of the S&P to 5.5% of the S&P or 6% of the S&P, that money is coming from somewhere. It's just not all new money that's gone into NVIDIA.
Kristina, thank you for that.